Hello, 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 good day to everyone. So today I'll be discussing about the fundamental news trading. And a lot of traders are really using this, especially the day traders. Yes, they would take advantage of the quick, profitable movement of the market from the news. Okay, some are trading the spike, some are trading the pre-news, and then some are trading the retracements. Well, anyway, you can learn all those three different trading methods later on, how it's really done. Okay? So, but today we're going to discuss about the fundamental news trading. So, this is quite a long discussion. Probably we're going to have probably three presentations. We're going to divide this into three. Okay? So, I just have this recorded in order for you to be able to apply the fundamental news trading in one of your trading arsenals, trading techniques. Okay, so now let's go to the first one, fundamental news trading. So you're going to create a trading plan with a bias. So definitely you're going to look for a bias in your trading. You just have to secure that. It's just like when you're going to use the five principles of the Elliott wave trading, you must have the long established trend. Okay, directional bias. Okay, so well, anyway, that applies to any trading strategies. Likewise, also it applies in trend following strategy. Okay, so basically, the news trading is all about, first of all, getting familiar of the these four things: fundamentals, technical, supply and demand, order flows. So you have to know the market sentiment, the order flow, supply and demand. Okay, you really have to know that. That's very important. Then market sentiment. So this is even before the news is being released. What's the current sentiment of the market? Then fundamental news. Some said that it is a catalyst, but there are times that fundamental news doesn't really mean that it's if a catalyst for the change in the chart, the market movement. Next, we have the technical analysis. Okay, so this is quantitative, this is the qualitative analysis. So if you're going to combine the two, much better. You're much better as a trader. And if you're going to combine the four, the four, much and super better. Okay, so are the four things that you need to learn. So what to watch? What do you need to watch? You're going to watch the inflation, the economy, the infrastructure, and others. So basically, inflation is higher rate, higher interest rate, higher inflation, higher currency value. Inflation is the increase of the money supply that is circulating in the economy. Example, the United States is printing a lot of money for the stimulus package to give to those businesses that are dying and to give to those people who were unemployed due to retrenchment because of the pandemic, coronavirus. Small businesses were closing, and for that, a lot of people were unemployed. Okay, so then we have the inflation is the increase of money supply. So if the government prints a lot of money, everything that we buy, the prices of everything that we buy increases. Why? It's not really the 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 the, the, the money is the product is really what you call this uh, product is dependent on the inflation. If the raw materials are very expensive due to the inflation, so they're going to increase the price of the product. Mm. And then for when it comes to inflation, we're talking about the increase of money supply. It's not necessarily the skyrocketing prices of the consumer prices of products, consumer products. So whenever there's an inflation, higher interest rate, higher inflation, higher currency value, that would be good for the currency. The currency is going to go up, but not hyperinflation. Just enough. The tolerable inflation is 2 to 3% for the central banks. That's what they want. Okay, lower interest rate, lower inflation, lower currency value. Okay. So next we have the Consumer price index, you have to watch that also. Okay, so why was that? And purchasing price index, you have to watch that also. Purchasing price for the manufacturers and for the buyers, consumers like us. So you have to watch that too because it affects the overall GDP of the economy. And if the GDP is up, then the whole economy is okay. Then it will have a positive effect on the currency. Okay, so these are being watched also in our um, website regarding the news releases. Okay, later on you're going to learn all those different websites where you can get the information about the different news releases. Okay, so after the inflation, yes, higher PPI, purchasing price index, higher CPI, higher inflation, higher interest rates. Good for the currency, lower PPI, lower CPI, lower inflation, lower interest rate. Okay, so that's it. Next, you have to watch the economy, gross domestic product, primary measure of the economy's health. Core GDP does not include transportation. GDP is also related with retail sales. Why? Because example, the retail sales is up. The overall economy, the GDP will be up also. It's good for the economy if retail sales is good. Then the gross domestic product is good. Take for instance, the restaurants. During the pandemic, restaurants are closed. Definitely that would affect the GDP of the country. And if it affects the GDP of the current country, the currency is going to go down. Why? Because it has a negative effect on the currency. Okay? So because of the retail sales here serves as a root cause of why the GDP is going down. Okay? So then we also have retail sales measure the value of retail sales level. Non-farm payroll, labor relation is related with consumer spending. So labor relation. So there are people who are employed and it's related with spending, consumer spending. If you're employed, then you have a lot of money to buy for the goods, for your house, and the food and everything that you want. Okay? And also the non-farm payroll is one of the most volatile news. Okay? It's very volatile. Try to observe this when there's an NFP news release. So you're going to see a huge spike, very large spikes. So a lot of traders are using this, especially spike traders. So they're going to take advantage of this. And then we have also the next one, higher retail sales, higher GDP, higher inflation, higher currency value. That's what I'm saying a while ago. Lower the retail sales, lower GDP, lower inflation, lower currency value. Higher employment changes, higher GDP, higher currency value. So that's it. Next, lower employment changes, lower GDP, lower currency value. Okay. So then, ISM Institute of Supply Management measures the level of purchasing managers in manufacturing sector. Now, if the reading is above 50, it's expanding. If the reading is below 50, it's contracting. And if the middle is in the middle, in the 50, it's just the middle. It's just the center. Okay? So nothing happened. Okay? It looks on the following: employment, production, new order, supply, deliveries, and inventories. Okay? So news traders are also watching this, but this is a minor compared to the GDP, the inflation, and the non-farm payroll. These are huge. These have huge effect on the movement of the candles in the chart. Okay, then we also have reading at 50 is medium. The reading below 50 is contraction. Higher PMI, higher GDP, higher currency value. Lower PMI, lower GDP, lower currency value. Okay, PMI means Purchasing Managers Index. Okay, next, new home sales, new existing home sales. Now, if there are good home sales, it's going to affect the GDP also, and it's going to affect the value of the currency also. They are related, interrelated. Retail sales, the new home sales, it affects the GDP because they are under the umbrella of GDP. Okay, including the homes, the home sales. Okay, so that's it. And then we also have housing start, building permit, and housing prices. Measures the health of the housing sector, but the two were the most predictable: housing start to building permits and housing prices. And also we have the durable goods. Durable goods measure the primarily goods with shelf life of more than 3 years, such as household appliances. Higher housing figures is related with durable goods. Now, if lots of homes are being constructed or being made, definitely you have to put your appliances inside the home, inside the houses. And if there are homes that are being built, there are also durable goods that are being sold. And definitely it's going also to affect the overall economy, which is the GDP, and definitely it directly the affects the what? The currency value. So they are interrelated. If you're going to make a drawing on this, okay, they're interrelated to each other. So they affect each other. Okay. Then we have the higher housing, higher GDP, higher currency value, lower housing, lower GDP, lower currency value. Then we also have the infrastructure. Current account is the sum of the balance of trade minus imports of goods and services. Sum of the balance of trade. Okay, minus imports, goods and services. So that's the formula. The trade balance also, we have how much we are producing and how many goods we buy from abroad. Okay, so there should be trade balance. You should be watchful of that as well. Okay, this is okay. So next we have capital flow, investment of the country, how much is coming in, capital flow out of the country and in the country and out of this country, bookkeeping report. Okay, so it's all about the investment of a certain country to another country, and that's it. Okay, the countries report, other countries report also in the countries. And then the other one, consumer, these are smaller. The consumer sentiment, consumer confidence, Chicago PMI, Empire State Business Index. These news do not move that much, but it can be traded in direction where it goes. So this is our these news releases are good for sentiment trading because there will be just minor reversals and then it's going to get back to its old direction. So it doesn't affect the direction or the current sentiment of the market. So this is good for the pre-news trading. Okay. Then we're going to discuss about the economic calendar. So we'll be right back for a while.